What's going on, everybody? I hope you're having an amazing day so far. My name is EQ. Welcome to EQ Trades. In today's video, we're going to be going over trading through time frames and pretty much how I use 3 time frames to reference where I think that price can be going into the next couple hours as well as into the next couple months. And shout out to Luis in the EPIQ Trading Floor for this question. And if you have any other crypto or trading related questions that you want me to make videos on, don't forget to drop those in the comment section. Now we're going to use Bitcoin on the Coinbase chart as a reference and an example on how I do my time frame trading and how I do my discrepancies and pretty much how I figure out how I'm going to be trading for the next weeks to months or even hours, for example. So the first thing I do will naturally start on the longer time frame. The 4 time frames that I like to watch are the daily, the 4-hour, and the 1-hour. Now if I'm doing some long-term analysis, I'm going to start on the weekly or the monthly naturally because you want to start on higher time frames to find critical supports and resistances. But on a day in and day out basis, I'm going to be trading and looking at the daily, the 4-hour, and the 1-hour. And then if I want sniper entries and exits, I'm going to use the 15, 10, 5, 3, so on and so forth. But as a standard base mean for what I'm going to be trading, I typically will use the hourly for the lowest time frame reference. So Bitcoin on the daily is in a bullish crossover at the moment, but it's looking relatively exhausted. You're hitting this resistance of the POC or the point of control for the VRVP, which is going to tell us that this is the highest volume point in this entire consolidation range, or what you can see visibly on the chart. And at that token, you can see that volume has been in a consistent downtrend, which would be a regular bearish divergence. And we're also pretty exhausted on the CCI and the MACD. So overall, I would put this into a bearish category, and I would rate this chart bearish. Then the next one I'm going to look at is going to be the 4-hour chart. So I'll drop into the 4-hour. We can get a closer look of how price action is looking on the shorter terms. I can also see that this is some sort of trend that we've been in as well. I'll get this a little more accurate so it's touching just on the wicks too. And then we can even extend this resistance up here like that. So now you have a new range of support and resistance based on the 4-hour. We'll even make this green for support. And when I'm looking at this chart, I can see, yeah, we are in an uptrending consolidation, which is not the most bullish thing to see, but there is bullish volume flow, and the CCI and the MACD do have plenty of room to go up. So overall, I do think that this chart, especially holding the support right here, was a bullish chart. So I put the 4-hour into a bullish category. So right now I'm currently looking at a bearish daily and a bullish 4-hour. So the last one and the last piece of the puzzle is going to be the 1-hour. So when I zoom in on the 1-hour, it gives me an even cleaner picture of kind of what's going on in the short term. I can see we are in a bullish crossover as well. I can see price is making a pretty strong move at the moment. The volume is holding bullish over the 0 mean on the VFI. The MACD does have plenty of room to go up. Now the CCI is quote unquote overbought, but that's not a bad thing. I'm more worried when I see the MACD overbought, not necessarily the CCI overbought. This typically can be a sign of a potential surge incoming. So all in all, I am looking at this 1-hour as a relatively bullish chart too. But because I have 2 time frames that are going to be bullish and 1 time frame that's going to be bearish, that would tell me that more than likely the market is still going to continue to move relatively sideways. The points when I really want to get into a long-term long or a long-term short are when all 3 of these time frames are matching. So when I see the 1-hour, 4-hour, and daily all showing bearish or all showing bullish, those will be times that I'm going to look to really jump in and stay in a longer term trend. Besides that, if there's any sort of discrepancies, then that would tell me that the market is a little bit indifferent and that you can expect to see some choppiness. And then depending on where the variety or where the discrepancies are going to tell you exactly if it's short, medium, or long term that you could theoretically see these ranges and these price differentials start to really take place. So now that we know that the long term is going to be the one that we think is going to be the most bearish per se, we're really going to wait to see the exhaustion on the 4-hour and on the 1-hour. You can see how far we're stretched on this bullish crossover as well. Typically this will tend to pull back and get back to this LRC as more of like a point of like volume control. It acts like a magnet, essentially like a Bollinger Band would work. So then knowing that on the long term that is what I'm expecting, I can see on the 4-hour that we're getting pretty close to an LRC resistance retest. And this is also going to be a support and resistance retest that was going on within this uptrending consolidation. So for example, if this 4-hour did want to hit a resistance somewhere in this range of the 67 to 68K, where you're going to hit this SR flip and you're going to hit the LRC resistance based on the crossover strategy, then from this point, you could start to see that actual trend get exhausted on the 4-hour and start to kind of follow suit into the daily chart, which was showing that overall bearish trend. And then going into it even further, now I can go into the 1 hour, I could snipe down and I can see, okay, we are in a bullish crossover, we are seeing a nice impulse move. And not only is this a good SR flip, but if I actually do put a trend line right up in this range here, there's a lot of support and resistances that are going on anywhere from 67.3 up to about 67.5. And then from that point, price will naturally jump up to 68.1 at the high. So you could see a nice little pump right up to that 68, 67K range, testing liquidity wicks and zones. And then if you start to see weakness on the 1 hour, then that's when you can know that, okay, all three of my trends are showing that bearish potential. And that's when I would be actually looking for those sniper entries and exits for a long-term short, for example, in this case, because we're waiting for everything to line up bearish. Because like we've been talking about in the EPIQ Trading Floor, we do think that this could potentially pull down to, let's say, the 40K range. And for those of you who do want to come trade with me, there are limited seats available in the EPIQ Trading Floor. So if you want access to this, you can click the link in the description or the link that I'm going to tag up in this video. And that's essentially how I use my confluences across multiple time frames and how I like to trade in between the 1 hour, the 4 hour, and the daily. Now, if you do have any other questions related to this trading strategy, or any questions that you might want me to answer, make sure to drop those in the comment section, because I want to make sure that I'm creating content that is actually helpful to people. And at the end of the day, I'm here as an educator, so I want to help you become the best trader possible. And this is going to wrap up the video on trading across multiple time frames. If you did find anything useful, hit that like button and hit the subscribe button if you're not subscribed already. I hope you have an amazing morning, afternoon, or evening, depending on whenever you tune in the world, and we'll catch you on the next video.